Welcome to Market Movers. I'm Jim Iuorio. Normally on Market Movers, we talk about binary market-moving events like an economic release or a Fed meeting. But today we're going to talk about something a little different and a little more nuanced, and that's earnings season. Now, although in total we can view it as one event, in reality it plays out in stages as each company releases, and I think that makes it a little more interesting. Now, this week is a big week for earnings as close to 25% of the NASDAQ and S&P release, but it's the week after that's the bigger week where almost 40% of each index releases. We're going to look at the weekly options in both the E-mini S&P ES and also the weeklies in the mini NASDAQ NQ. Now, the NQ options have been a source of huge explosive growth. Over the last year itself, average daily volumes increased 187%. So right now, the liquidity in the NQ is solid around the clock. The ES liquidity is extraordinary around the clock. Now, for perspective's sake here, the ES weeklies for the month of July so far have been 68% of all ES trades. Half of them have been spreads. That gives you an idea how liquid the spreads are. Now, joining me today is co-founder and chief market strategist for Path Trading Partners, Bob Iaccino. Now, Bob, we've had a couple good economic numbers, starting with NFP. We've had some earnings that have been decent. Even China had some pretty good numbers. Economically, have we turned a corner? Earnings-wise, have we turned a corner? Thoughts?
Well, I think we may have stopped turning the corner in the wrong direction as opposed to having turned a corner in the right direction. I mean, to me, when I saw Alcoa come out and hit the number and rally the way that stock did, it kind of gives you this idea that the market is saying, as long as you don't screw this up, we'll push you higher along with the easy money.
Okay, so you're saying, I think, is that it's buoyant for some other reasons, too.
Yes.
One of them is an interest rate picture, too.
Absolutely.
So all we have to do in earnings is beat the bar,
right,
and we can debate all day long about how low the bar is.
Right.
Okay, overall, are you bullish? Are you bearish? What are your thoughts?
Okay, so I hate that I'm bullish, is what it is. I'm bullish, but I hate that I am. I don't like this rally. So in terms of what I think is going to happen, the NASDAQ usually leads, and I think the NASDAQ is going to catch up.
Okay, so Microsoft, B of A, Google, and Apple all missed last time. Are they going to miss again?
I'm not willing to say that Apple's going to miss or Alphabet's going to miss, but I think B of A, Microsoft, I think are going to beat. I have specific reasons that we don't have time to go into, but I think both of them are actually going to surprise to the upside, and I do want to see banking lead, so I'm kind of cheering for Bank of America.
Okay, how do you express that opinion?
Well, to me, I'm going to do it in the NASDAQ, because as I said, I think the NASDAQ is going to catch up. So what we saw is breakouts of horizontal channels to new highs, all-time new highs, in the S&P and in the E-mini, right? Or I'm sorry, in the Dow. So what I want to see is I want to see the NASDAQ catch up and break their new high. That also broke out of a channel. So what I'm going to look for is a NASDAQ 4570, 46 even call spread for week 4 expiration. I'm going to look to get in that for 13 ticks or better. I've got better than one-to-one risk reward at expiration. So I think that's going to be a good way to play it.
I like it. And I like, we've talked about this before too. When we're talking about short-term events, it seems like a pretty good idea instead of just buying an option to do a spread, because volatility is always pumped up before an event. Right. And you're going to be a buyer, you might as well be a seller too. So I'm doing a similar thing too. I'm looking at the week 4 ES 2160, 2170 call spread for 2.8 ticks. Now this trade risks the 140 you put out to make a potential 360. What I like about this is right now it's about, to fill it out, it's about 30 ticks above where the market is. If you ask somebody to flip a coin and you got a week's time, flip a coin, could the market be 30 ticks higher, 30 ticks lower? What's the odds of that? And although they might not be 50-50, I think they're better than 2.8 to 10. So I like the risk reward on that too. So now the following week, we mentioned it before, the big week of earnings season, the biggest week, is the week where Apple, Google, Facebook, and obviously just from reading those names, have huge implications on the NASDAQ itself. You said about Apple. Last time, Google missed. Google missed by this much, but for quarter after quarter, Google was crushing. Has Google changed? Has Facebook changed? Is Facebook going to take the mantle? What's going to happen there?
I think Facebook is the one stock that is expected to match or beat. The street continues to look for Facebook to do better and better. It's one of the FANG stocks that people are still fans of. The overall market, in terms of one of the reasons I like your trade, is that the S&P is at all-time highs, but only about 15% of the stocks in the S&P are at 52-week highs. So there's a lot of room to push your trade up in that. So I like all of them. I don't know so much about what Apple's going to do, but I think Facebook's going to match.
We haven't even decided, and earnings matter. They obviously matter. As a friend of ours says, there's the mother's milk of the stock market, and that's fine and well and good. But we also have the tailwind of a German 10-year trading at negative 0.15. So it's like when two good things come together if we have an earnings beat.
I hate the rally.
Yeah, but I'm looking at now the week 5. There was no such thing as the week 5. They call them the end of month in the NASDAQ. I'm looking at the July 29th, 45.40, 45.10 put spread for 8.5 ticks. Now this trade risks 170 to make 430. Again, I am more in my head, more of a bull than a bear, but sometimes you have to mitigate risk if you have too much of a certain stock going into it. Does that ever fit into your head?
It does, and I actually like this trade a lot, and I'll tell you why. Because we're in a low VIX environment right now. The volatility is kind of ticked off a bit. It seems like the market is content to be higher again. You know as well as I do that if this thing comes off and if that trade starts to work, you're going to get that kick of volatility as well, because vol tends to rise a lot faster in a falling market than in a rising market. We know there's a lot of global tension, a lot of situations that can hit the market pretty quickly.
So risk happens
Right.
quickly is what you're saying. Yeah, we've seen that before. We've both been around a long time. And when it happens quick.
Right.
So thank you so much, Bob, for your insight. We appreciate it.
Glad to be here.
And we're going to keep a close eye on the markets during earnings season. And it's going to be fun because I love earnings season. Thanks for joining us in a special edition of Market Movers. I'm Jim Iuorio for the Futures Institute, where we're trying to help you become a better trader.